All right. Well, thank you for joining me this evening. It's been a 3-month period we're never going to forget, from a once-in-a-100-year pandemic, which the people of this city responded to courageously, to a $350 million budget deficit, which City Council worked with us to solve unanimously and without drama, to the community pain we felt with the murder of George Floyd and all the issues that sparked, to now dealing with the economic pressures of so many people being out of work until we can get this economy reopened. And now we have an issue that I didn't expect to be addressing, but felt like I had to, because when you're mayor, you can't just say, I'm exhausted. And the overcharges of car insurance have been plaguing Detroit for years. And 2 weeks from today, pretty much every driver who's listening to me has the opportunity to save hundreds or thousands of dollars in some cases if you want to exercise that option. Now, you may not want to exercise that option. In fact, if you're happy with your health insurance as it is, you don't need to do anything. It'll just continue with your unlimited coverage. And if that's the case, you can switch over to Wheel of Fortune or Family Feud right now and skip this, because you're fine. But if you want to see what the options are, I'm going to show them to you. And what's really made me angry is that the law was signed in May of 2019. I had expected the car insurance companies by now to have done a major education campaign to say to people, July 2nd, you have all these choices. You can choose to save a lot of money. There's been very little information, and in some cases I'm hearing reports of insurance agents giving information that's wrong. And so I felt like I had to do this today. And if you'll stay with me for the next half hour, it's going to be pretty substantive. If you got a bill, if you got your car insurance bill, put it in your hand, because I'm going to take you through a bill. But if you stay with me for a half hour, you'll know what the choices are. At the end of that half hour, you may say, I like my current plan, I'm staying with it. That's great. I'm not here to tell you which plan to take. I'm here to do what they didn't do, to show you the choices. And to understand them, you have to understand how no fault works itself. And so at the end of this, you're going to get a chance. You can text us at this number or put in a question on the website, and our team of experts are going to come up here, and between us we'll answer the questions that you have. But let's go back to the beginning. In 1972, the Michigan legislature passed the no-fault law. They said rates would go down, lawsuits would go down. And there were editorials everywhere. This is a typical one. The lawsuits are clogging up the courts. This will end the lawsuits. We'll have only a few cases, and young single drivers will save the most. That's what we were promised in 1972. And it's pretty humorous as you look back on it, because what happened was just the opposite. Instead, for the last 7 years, Michigan has led the nation in the highest car insurance rates, and Detroit has led the state of Michigan. And the reason that the law failed is something I understand very well. It's got nothing to do with car accidents. It has to do with medical costs. If you are the driver or members of your household get in an accident and you got to go to the hospital, who pays the cost and how much does it cost? What has exploded are those medical costs, and it's something I saw firsthand at Detroit Receiving and Sinai Grace, and I can explain to you exactly how it happened and what we have to do about it. But in 1972, medical bills were only 6% of your car insurance bill. When you read the debates in 1972, they're really quaint. It's all about somebody rear-ended somebody, and there's $500 in damage to their trunk, and they sued each other over who had to pay for the $500. The discussion was when GM and Ford and Chrysler put in the 5-mile-per-hour bumper, which was going to be the new invention that if the two cars hit at 5 miles an hour, it wouldn't do any damage. These things would all go away. They were talking about damage to your car. Because in 1972, if you got in a car accident, your medical bills were paid by your own health care. So if you were your company Blue Cross, or you were on Medicare, or you're on Medicaid, or you're on VA, if you got in a car accident, your health care handled it just like if you had a stroke or you fell off a ladder. And for those who didn't have insurance, health insurance, you paid $45 into the uninsured motorist fund. That was the situation in 1972. And so it was 6% of your bill, your medical bills in 72. Today, it's 42% of your bills. What has exploded is the cost of treating the drivers and their households. And it was never intended when the bill passed. And so for 48 years, people in Michigan, in order to drive, have been required by law to buy the most expensive medical coverage in America. And so when I came in, I spent 9 years at DMC, I understood exactly what was going on. I understood where the waste was in this, and I said, all right, the Detroit Charter actually allows the city to start a car insurance company. And so I went to Lansing because we needed state law authorization. And I said, look, I'm not going to fight with all you guys. Give us the authority to start D-insurance. I know how to run a health care program, and we'll start our own, and we'll offer this option to Detroiters. And at first, it was bipartisan support, came out of committee right away. And then the outstate Republicans realized Detroit was going to go from having the highest car insurance in Michigan to the lowest. They didn't want to have to explain that to their constituents, and they killed the bill on the Senate floor. Said, I'm not doing anything to hurt you, but they didn't want the embarrassment. So we came back in 2017. I sat down with the Republicans who shot it down, and I said, okay, what do we have to do? And they said, we liked your plan. The problem was it needs to apply to everybody. So why don't you offer the same options you were going to offer in driver's choice to everybody in the state, and we'll write into the law everybody has a guaranteed rate cut of 20% if they take advantage of it. Said, great. Came out of the House committee, huge bipartisan support, labor and business, and it looked like it was going to go for sure. But the financial interests that had been making money on these ridiculous health insurance reached into Lansing and blocked us. And I realized that we were up against so much money that going to Lansing wasn't going to work. And so in 2018, I sued the state of Michigan in federal court and said Michigan's auto no-fault law is unconstitutional. Either you are wealthy enough that you can buy the most expensive car insurance in America, or you can't afford it, in which case you have to drive without insurance, criminalizing our poor. And the first day of the court hearing, the federal judge, Judge Stee, heard our argument and said, this system is shameful. And all of a sudden, Lansing said, we have a problem. We've got a federal judge. And then one other really good thing happened. Gretchen Whitmer got elected governor. And in her first few months, she made this a priority. And we had the good fortune at the same time to get an outstanding Senate Majority Leader in Mike Shirkey, a Republican, and a Speaker of the House, Lee Chatfield, a Republican, and they made it their priority. And for all the other fighting they were doing, the three of them sat down together and came up with a bill. And we had great backing from Dan Gilbert, who lobbied nonstop for Detroiters, and Reverend Wendell Anthony and the Detroit branch NAACP, and the Shrine of the Black Madonna, the Black Slate, the Council of Baptist Pastors. We put together a coalition, and it passed the bill. And so for the first time in 48 years, two weeks from today, you have a choice. And I'm going to talk to you tonight about what that choice is. The law takes effect July 2nd. Does that mean you get a rate cut on July 2nd? No, you don't. If you do nothing, you get the same policy and the same bill. And that's why the insurance companies aren't contacting you. They're perfectly happy with you keeping the same thing. You have to act for yourself or it won't change. And here is how bad it is. This is insure.com, the latest national averages of what it costs to insure a car. A car in Ohio today costs $1,034 to insure. In Wisconsin, $1,049. In Indiana, $1,200. In Illinois, $1,400. And the average in the state of Michigan is $2,800. And of course, as we know, in the city of Detroit, it's even higher. It's $4,400. This is unconscionable, and it creates a system of haves and have-nots, whether you can afford mobility or you can't. And so when you look at this, you say, what's the reason for the difference? They're driving the same cars in Ohio that we drive up here. If you've been in Ohio, their drivers sure aren't any better than ours. Sometimes I wonder. And their doctors and hospitals aren't doing any different procedures. Why does it cost $1,000 in Ohio and $2,800 in Michigan, $4,400 in Detroit? And there's only one reason. Michigan is the only state that says when you buy your car insurance, you have to buy health insurance for yourself if you're in an accident, an unlimited amount. Even if you're on Medicare and you're already covered, you got to buy it again. Even if you work for a company and you love your Blue Cross, your Health Alliance plan, you've got to buy it again. The difference between Ohio and Wisconsin and us is in those other states, if you get in an accident in Ohio, you use your regular health insurance. You don't pay for it a second time. And so this is a choice that we have to make as a state. Do we think that the health insurance you're getting with your car is worth paying a second time? For 48 years, you didn't have a choice. You had to buy it a second time, no matter how much you liked your health insurance. Starting in 2 weeks, if you like the health insurance you have, you don't have to buy it a second time, and I'll show you how. So if you take out your bill, there are 2 places on your bill that require you to buy medical coverage. One, if you find it on your bill, is called PIP, P-I-P, or Personal Injury Protection. It pays your medical bills for you or people in your household. If you get in the accident, you go to the hospital, you go to the doctor. The other is MCCA, or Michigan Catastrophic Claims Association. It might show up on some bills as statutory. It'll be $110 for 6 months or $220 for a year. That pays for your medical bills over $580,000. Those are your requirements to buy medical coverage with your car insurance, even if you already have coverage. And so now, for more than 40 years, you've had to buy both. Is it a good decision to buy both? This is what you get to decide now. So in most cases, most states, you don't have to. In most states, you got Blue Cross, you like it. You got Medicare, you like it. You don't have to buy it again. When you get in the car accident, your Blue Cross or your Health Alliance plan or your Medicare covers it. And think about senior citizens. In the other 49 states in this country, when a senior citizen on Medicare gets in an accident, Medicare covers the bill. People who have lived their lives and earned Medicare, if you have a stroke, Medicare covers you all the way through. You fall off a ladder, Medicare covers you all the way through. In the other 49 states, you get in a car accident, Medicare covers you all the way through. The Medicare law says Medicare is secondary, which means if somebody else has to pay for it first, they do. The only state in America stupid enough to write a law that says senior citizens are primarily responsible for their car insurance is Michigan. And so Michigan seniors have been forced to buy double coverage with their car insurance when they already had Medicare. And as every senior knows, you call up and your agent will tell you, sorry, Medicare won't cover it. Well, the reason Medicare won't cover it is because the law in Michigan said you had to buy it with your car insurance. That changes in 2 weeks. So there's 12 states that require you to buy PIP, Personal Injury Protection, some medical coverage with your car insurance. And so Utah, for example, says you have to buy $3,000 worth. After $3,000 from your car insurance, your medical bills go to your regular health care. In Kansas, you got to buy $4,500. Pennsylvania, $5,000. You can see the different states. So you get up to New York, which is the highest. In New York, the first $50,000 of your bill in a car accident is paid for your car insurance. After that, it goes to your regular health care coverage. The only state in America that says all of your medical bills from your car accident have to be paid in your car insurance is Michigan. We've got the so-called unlimited coverage. This is why for 7 years in a row, we've had the highest car insurance rates in America. Now, you think that's bad? That's not the worst of it. Because what I'm going to show you now, you're not going to believe. In 1972, the no-fault law let doctors and hospitals charge whatever they want. And that's the way the country worked. In 1972, doctors and hospitals were like gods. They could set whatever price they wanted. They called it usual and customary charges, and everybody paid it. There were no HMOs, there were no PPOs. Whatever they charged, you paid. Now, in the last 48 years, that's long gone. The only people in America who are paying whatever the doctors and hospitals charge are drivers in the state of Michigan, because 48 years later, that law is still in place. And I want to show you what it means. I ran a healthcare system. I watched this every day. I never could believe it. But if you go in for an hour of physical therapy and you're on Medicare, your therapist is paid on average $31 for that hour. If you're on commercial insurance, you're on Blue Cross or Priority or Meridian, they'll probably pay them $42 an hour. The therapist is happier about that hour. But if you go in on no fault, your car insurance is paying them $79 an hour. CAT scans are even worse. If you go in on a CAT scan and you're on Medicare, they'll charge $262. You're on Blue Cross, it'll average about $419. But if you go into the same machine in the same building, your car insurance will be charged $1,821 for that identical CAT scan performed by the same people on the same machine. And the MRIs are even worse. They go from $484 on Medicare to $770 for Blue Cross and HMOs to $3,259 on average. And this is what is happening. Your car insurance rates are going up because the medical bills that you are being charged are triple what Blue Cross is paying. And this has been going on now for 48 years. And then the lawyers figured it out. And when the lawyers figured it out, they realized the money was in the medical bills. They didn't really want to sue over who was at fault. And so what we had was a whole bunch of lawyers who would sue the insurance company. When they go to pay the hospital the medical bills, the lawyers would take a third of the medical bills. Didn't do anything of substance as far as I'm concerned. And it drove our rates even higher. And people in Detroit are well aware of this. The reason Detroit's rates are higher than the suburbs is because we all know the story. Somebody got in a car accident, all of a sudden the insurance helper called them on the phone and got them into a program, and the next thing you know, they're into a doctor, they've got a lawyer's taking a third of those medical bills, and it blew our costs through the roof. One of the folks that you're going to hear from the question and answer today is a fellow by the name of Mark Bernstein, who was one of the most famous trial attorneys in this state. Mark Bernstein went to Lansing with me. His fellow trial attorneys haven't been speaking to him. But he said, this is morally wrong. He went to Lansing and lobbied to get this changed because he thought it was ridiculous the way these bills were being driven up off of these lawsuits. And you'll get a chance to hear from him later. So here's what happens. You have people who want to defend the system. And there have been people who have had tragic accidents who have gotten great care under Michigan's no-fault medical care. There's no question about it. But what about the people who don't have coverage? We have a tale of two Michigans. If you are wealthy enough to afford this expensive care, when you get in a serious accident, and probably 1 out of 2 or 3,000 drivers every year is in a terrible accident that probably more than $250,000 in bills, you get great care. But 20% of Michigan drivers have no insurance at all because they can't afford it. And in Detroit, that's nearly 50%. And so you know what that means? If you don't have insurance at all and you get in an accident, you have nothing. You have no care. And so when people say to me, hey, we've got the best insurance in the country, yes, you do if you can afford it. But you've excluded almost half the folks in our city. And you've criminalized them because they have to go to work. And here's the worst part, why this current system is so immoral. You got a woman who works at a nursing home in Detroit making $12, $13 an hour. She's driving to work. She's bringing home $20,000 a year. She's not spending $5,000 on car insurance. So she's driving to work very carefully because she doesn't want to get pulled over. She stops at a stoplight. Drunk driver comes up and rams into the rear of her car. She's seriously injured, has to recover her ability to walk. She has no medical coverage. And she can't sue the drunk that ran into her. Because under Michigan law, if you drive without insurance, you can't even sue the person who was reckless and injured you. And that means that person whose life has been devastated has nothing available to them. Think about what this means. This was why we were going to win the constitutional court case in federal court. If you are wealthy enough to afford the car insurance and you have a tragic accident, the coverage is great. But you have completely excluded people of lower income from any kind of protection or any kind of legal mobility. It can't go on, and it's why I fought so hard to change it. So let's talk about what the real world looks like. And this is where you pull out your bill. And I have a friend who's a driver who owns, I don't know why, a 2015 Ford Focus. And here's her medical bill. She's got a good driving record, and her bill for 6 months is $2,331. That's half a year. For a full year, it's $4,662. Now, a Ford Focus in 2015, this Blue Book value is probably $5,000 or $6,000. She's spending $4,600 a year just to insure it. That's what she has to do in order to be able to drive. I'm going to show you why her costs are so high and what her options are now, and you can follow along. So what makes up this bill? Well, collision. You got to get your car fixed in the shop. It's about $591. It's about 26% of your bill. You can look on your own bill on collision, see how much it is. My guess is it's going to be in this range of about 25 or 30%. And then comprehensive, which is basically theft. People think car thefts are the reasons the bills are so high. Not true. Comprehensive is about $192 on her bill, about 9%. And then you've got some other things. Bodily injuries, basically injuries to your passengers. Or if you want a rental car, if your car's in the shop. Those things cost another $257. Without the medical bills, her cost would only be $1,071. Looks a lot closer to Illinois and Indiana. Unfortunately, here's what we're paying in Michigan that they're not paying in Ohio, Wisconsin, Indiana, Illinois, and just about any other state. The medical expenses, PIP and MCCA, and you can look at your own bills right now, and you can see for yourself what yours is. But in her case, her PIP, her medical expense in case she has to be hospitalized, is $1,149. So look where it says on your bill, personal injury protection, it's 49%. And then near the bottom, MCCA, or on some bills it might say statutory, it's $110 for 6 months, $220. More than half of the bill is the medical bill, even though she already has really good health insurance. More than half her bill is the medical. And so, for the first time since 1972, 2 weeks from today, you can decide what's your medical coverage if you're in an accident. Are you happy with your Medicare? Or you work for a company and you don't think the HMO is very good, you need the PIP insurance? So here's what you can do. One, you can keep your existing unlimited policy. Nothing changes. If you like the policy, nobody's trying to take anything away from you. Keep it. You don't have to do anything. They'll just renew it. You can opt out entirely. If you like your Blue Cross, you like your Meridian, you like your Medicare. You say, if I'm on Medicare and I have a stroke, Medicare is going to take care of me all the way through. Why do I need to pay a second time for a car accident? I trust Medicare to take care of me. If you want to do that, you can rely on Medicare or your employer coverage. Or if you say, you know what, I got decent insurance, but I don't want to buy the unlimited PIP. I want to buy a reasonable amount. You can buy less. You have 3 choices now. Keep what you got, go to your own insurance, or you can buy reduced amount. So, this is a little technical, but I feel like I need to do this because a lot of agents are pushing stuff out that just isn't true. When we talk about reducing or opting out of PIP, all we're talking about tonight are the medical benefits. But PIP, if you get into it, has 3 pieces. Your medical coverage. PIP also pays your wages if you lose work. It's about 85% of your pay. They'll pay while you're off, and they'll pay a survivor's loss benefit to your family for 3 years. Under the no-fault law, if you opt out of PIP, you still keep the work loss. You still keep the survivor benefits. All we're talking about today is, do you want to go from car insurance medical care to your own medical care? That's the only thing that we're discussing today. And so on July 2nd, you can change. Now, I've had one of my staff people is having their insurance renewed June 28th for 6 months. Her agent told her, you can't discuss this till December 28th. That's not true. We've got one company that's mailing something out saying, talk to us 30 days before your insurance expires. That's not true. You have a right in this state to change your coverage any day you want. And if you want to change on July 2nd, if you want to go from Allstate to Farmers to Progressive, if you want to switch from PIP to non-PIP, you can do that on July 2nd. You do not have to wait till November or December. You can do it whenever you want. And so if your agent is telling you you can't do it, call a different agent. Call a different company. They're not telling you the truth. You have a right to make a change July 2nd if you want to make a change. So, first option, keep your existing coverage. Here's the thing. The no-fault law by itself doesn't do very much to cut insurance rates. And so if you do nothing, your rates may go up a little, they may go down a little, but they're not going to change very much. And if you like your coverage as it is, you can keep it. But if you do nothing, don't complain about why didn't my rates go down. This law doesn't cut your rates. It gives you choice. If you exercise the choice, you get lower rates. If you like what you got, you keep it. You don't get to keep what you got and say, how come my bill didn't go down? Okay, this is about you having a choice. And I want to say this about the existing coverage. Michigan does have the most comprehensive medical coverage in case of serious accidents. And I spent 9 years running a hospital system. I can tell you, everybody knows how much they're being paid. And when you have no-fault insurance, and you're getting paid triple the amount of Blue Cross for a doctor visit or a therapy visit or an imaging test, I guarantee you every doctor's office manager knows exactly what kind of coverage you have. And when you're paying triple rates, you will get more doctor's visits, you will get more therapy sessions, you will get more imaging tests. The truth of the matter is, you will get more service because you're paying the most. Is that worth it to you or not is a decision that you have to make. But I'm not saying that there's no value at all. The question is it a reasonable amount? If you want to change, you need to shop around for quotes. And if you choose to change, they're probably not going to be excited. Because here's the thing. The insurance companies make more money if you stay with the higher rates. That's why they're not all over you to switch on July 2nd. Your agent, who's the nice person on the telephone, they make less money. Insurance agents typically make 10 or 15% commission. So if your car insurance bill goes from $4,000 to $3,000, they lose real money. And so your insurance agent will make less. I'm not saying they're doing the wrong thing. I'm just saying you should be aware they make less. The doctors and hospitals make less because they're not getting the triple payment, and the trial lawyers make less because they can't sue over the triple payment. So basically, everybody wants you to stay with the same health care. Nobody's coming to help you. You have to take the initiative yourself if you want change. This is why you haven't gotten a clear explanation about what your choices are July 2nd and why I'm doing this tonight. All right. So, if you think your health care coverage is good enough and you don't want to buy coverage with your car insurance anymore, the new law gives certain people the right to opt out. And that means you have to already have good coverage, what they call qualified health coverage. If you don't have medical coverage, you can't just opt out. You got to have coverage one way or another, either yourself or through your car insurance. And so basically, if you work for a company and your company's car insurance covers, or your company's health insurance, Meridian, Priority, Total, whatever it is, if it covers car accidents and your health care deductibles total are under $6,000, you have a chance to opt out. That's going to be the great majority of people who are employed that have health care coverage. So, what could be qualified health care coverage? Medicare. Now, you have to be on both Part A and B. A is hospitals, B is the doctor's office. 93% of Medicare folks are on both. But if you have Medicare Part A and B, you can opt out of paying health care with your car insurance in 2 weeks. Your employer plan, if it's qualified. If you bought on Obamacare, the exchanges, or you bought plans directly, if they cover car accidents and they're less than $6,000, they'll be okay. And the Veterans Administration, we're still waiting for the state to give us a final ruling, but at least as I read the law, I would expect that veterans should be able to rely on VA. Here's probably the single biggest thing we got to go back and fix in Lansing. Medicaid does not count. And so if you're on Medicaid, you can't opt out of paying for health care with your car insurance. It was the fight that we lost in Lansing. We're going to go back again. But Medicaid will not get you out. But you're going to have to provide documentation. You're going to have to give a piece of paper to your car insurance company to prove that you have qualified medical coverage. That's the only way you can opt out. And that's a reasonable provision because you should have to prove that you have medical coverage. So how do you do it? If you're on Medicare, it's easy. You send them a copy of your Medicare card that shows Part A and B. Senior citizens should have the easiest time, if you want to make this switch, to call your agent, send them your card, and be able to opt out. And for the average senior, it's probably $600 to $1,000 a year that you're probably paying in health care coverage. If you like your Medicare coverage and you trust it, you can opt out from having to pay a second time. Okay, let's say you're covered by health care at work. Your company is good, they got Blue Cross, they got an HMO. How do you opt out? You need a letter. If you're in what's called the self-insured plan, which is the really big companies, and it's usually Blue Cross or PPO, your employer should just send you a letter and you give it to your insurance company. If you're on an HMO, you work for a company, you have an HMO, you're going to have to get the letter from your HMO. So Blue Care Network, HAP Priority, all the other HMOs, you're going to have to get the letter from the HMOs. And so I want to talk right now to the 8,000 men and women who are working for the city of Detroit. And these are the men and women that brought us through a bankruptcy, that are rebuilding the city, and have done it through a number of obstacles. And all 8,000 men and women have qualified health coverage. So for those city employees who are in the Blue Cross PPO, we already sent this letter to your house. It tells you that you have qualified health coverage, and it lists the dependents in your families that are covered. If you choose to do this, you just give it to your insurance company. For the city employees that have Blue Care Network or HAP, we sent this letter to your house. And in that case, it gives you the phone number. So if you're on Blue Care Network, you call that number. Blue Care Network will send you the form. If you're on HAP, you call HAP. HAP will send you the form. You can give it to your car insurance companies. We've made it easy for you to exercise this option if you want. And if you do exercise it, it's going to mean a very substantial amount of money. So if you're a private company, I'm saying to you today, make it just as easy for your employees. Do the same thing. If you're one of the big companies with a self-insured plan, send them the letter, just like we did. If you're the smaller companies, you got HMOs, give your employee the phone number to the HMO so they can get their paperwork right away. And if this sounds confusing to you, I made it easy. Go to our website, and we've created a no-fault employer packet for every single company. In Tri-County area, it doesn't matter. Anybody in Michigan. This isn't just Detroit. And we'll show you what to do to get the paperwork to your employees so they can make this change. This actually isn't that complicated. Just get them the paperwork, and then they can make a choice. And if you went on to the Obamacare exchanges, you bought it directly, you just go right to your health care company, and they will let you know whether you're qualified. To the veterans, I'm still waiting for an answer from the state of Michigan. As I read the law, you should be able to send in your VA card. And I know the insurance commissioner is looking at it. I think you'll see an answer in the next week or two. And I'm hoping that we'll get a decision that says if you're satisfied with the VA coverage, you can opt out of paying a second time. If you're not satisfied with the VA coverage, you should buy the insurance with your car insurance. Okay, that was the easy part. Here's the complicated part. And there's no way to do this short. I got to take you through this because this is the trickiest part of all this. Because with opting out, there's a catch. Every relative living in your household has to have health insurance for car accidents. It isn't enough for you to be covered. It's everybody in your house. Because a relative in your house might ride in your car. So if you have a 30-year-old son who's uninsured living in your house, that person could ride in your car. And so they have to make sure everybody's covered. So to opt out, you're going to have to show your insurance company, not just you have health care coverage, but everybody in your house. Now, and it's a relative. If you took in a neighbor because you're good-hearted, it's not a problem. But if the relative lives in your house, they have to have health care. Now, you can have health care for your accidents one of two ways. You can have qualified health coverage, or you can have your own no-fault PIP policy. But everybody in your house has to have one of those two. If you live alone, it's easy. If you live alone, you're on Medicare, you send your card in, you're done. You live alone, you work for GM, you got Blue Cross as a qualified health plan, you send in your form, you're done. But if other people are in your household, I'm going to take you through some situations because you're going to have to work through this. So let's talk about this. Let's say you're on Medicare. You live with your husband. Your husband's got a job with a company. He's got health care. Okay, can you opt out? You can. You have Medicare. Your husband has qualified health plan. You can opt out. Everybody in your household is covered. Okay, let's talk about another household. You're on Medicare and you live with your daughter. She works as a waitress. She doesn't have health care. You wouldn't be able to opt out except she bought her own no-fault PIP policy. Now, you can opt out. You have Medicare, she has PIP. Everybody in your household is covered. This is literally what you have to do. You got to figure out everybody in your household, is everybody in your household covered? Now, you live in a bigger house, you got a daughter and a nephew. You and your daughter have the good fortune to work for the city of Detroit. You got qualified employer health care. 2 out of 3 are good. But your nephew's on Medicaid. And as I said before, to me, this is something we got to get fixed. But Medicaid doesn't count. And your nephew doesn't have his own car insurance. The fact that you have a nephew in your household who doesn't have insurance means you can't opt out. It means you still have to buy PIP medical through your car insurance. And so when you talk to your agents or your company, you're going to have to be prepared to say to them, these are the people who live in my house, and here's the health care coverage each of them has. I know this is a lot of work, but I'm going to show you in a second why it's worth it. So, okay, every relative in my house has got health coverage. I want to opt out. How much do I get? It means you won't pay any PIP or any MCCA. Your total car insurance bill will probably drop 30 to 50%. I'm going to say that again. If you choose this option, the total bill that you're paying will probably drop 30 to 50% in 2 weeks. This is a lot of work and a lot of detail, but let's go back to my friend who had her Ford Focus that was paying $2,331. If she opted out, she would save 54% of her bill because she wouldn't have to pay PIP medical anymore. She's going to work off of her City of Detroit health care. She doesn't need PIP medical. She's not going to have to pay MCCA anymore because she's got her City of Detroit medical. Her new bill is $1,054 instead of $2,300. Remember, that's for 6 months. She's saved now more than $2,000 off of one Ford Focus. Now, she's got to make a decision. Is it worth $2,000 to me with my City of Detroit coverage instead of paying for it a second time? But if you make that decision, for a lot of people, $2,000 is a lot of money every month to go for things that are pretty well needed. And so this is the question every Michigan driver has to ask. It's costing us 3 times as much in Michigan because we're buying the unlimited coverage a second time. We can get our rates down closer to Illinois and Indiana if we're willing to do what they do, which is use our own health care coverage when we get in an accident. If you trust your own health care coverage without the car insurance, we can get our rates down. If you don't trust your own health care coverage and you want the extra insurance, you're going to pay more. And that's just the truth of how it works. Something that for the city of Detroit is really good, and this is the provisions of bills I don't like, here's one that I love. Starting July 2nd, your car insurance company, when they set your rates, they can no longer consider your gender. They can't charge women more than men anymore. They can't consider your marital status. Those who got divorced know your rates went up. They can't consider that anymore. Whether you own a home or rent, what your education is, what your occupation is, and they can't consider what your credit score is. None of these have anything to do with your driving. They've been discriminatory factors for years. And so starting July 2nd, there are people who are going to benefit in the rates because they can't put these factors in anymore. And this is something the governor fought hard for, and our Detroit legislators fought hard for, and is a good part of it. Okay, let's say you can't opt out. You don't have qualified health care coverage, or you're not really all that crazy about your HMO at work. I don't want to rely on my own health insurance, but I also don't want to pay unlimited PIP. You now have two more choices. You can buy $500,000 of PIP, and you can buy $250,000 of PIP. If you do that, you need to talk to your company, but here's what it means. These are the states. Remember, New York requires you to buy 50, Michigan's unlimited. These are two more options. As you can see, we still have the three highest options in America. It's not like $500,000 and $250,000 in coverage is some low option. And I guess 1 out of 2 or 3,000 drivers a year goes over the 250,000. So you can kind of make a decision. And even after 250,000, it would go back to your own health care coverage. And so I'm guessing it's going to save you about $300 to $500. It'll be a little higher, a little lower. You need to get the number, but it's worth something. It isn't nearly as big as if you opt out. And the reason is the doctors and the hospitals can still charge whatever they want. So even though you're only buying $250,000 or $500,000 in coverage, you are still paying the most expensive rates of anybody in America. Savings of $300 to $500 is not a small amount. It isn't what you would expect. It could get a little better a year from now, because in a year, they're going to cut the fees that can be charged. And so 1 year from now, in July of 21, you can see CT scans, they won't be able to charge you $1,800, they'll be able to charge you $600. MRIs, they won't be able to charge you $3,200. It'll be $1,100. So it'll come down a little bit more in July of 21. But you should ask, what would my rate be at $250,000? What would my rate be at $500,000? And you can make a decision. And that's the great thing. What if you're on Medicaid? And these are our poorest residents, the one that could probably afford it the least. And we need to get this fixed, but at least here's what you can do. There is a special PIP plan that you can buy that covers you for $50,000. It'll probably save you $500 or $600 a year. And so if you're on Medicaid, there's a little bit bigger break. Whether it's going to be enough for you to afford your health insurance, you're going to have to evaluate. But the Detroit legislators and I are going to go back at this hard in the next year to get more protection for Medicaid recipients. And so to the 8,000 Detroit employees, here's what we're doing. You've got your letter telling you what to do. The details are on our website. Look at it, make a decision. You might want to change, you might want to stay where you are. Either one is fine, you have the choices. And last, I want to thank the people who turned the tide, because for years, we did not have Detroiters supporting us on this. But state representatives Wendell Byrd and Leslie Love fought this with us for 4 years. And Joe Tate and Karen Whitsett got up there this year, or actually last year, and came in like a house of fire on this issue. And Tanisha Yancey and Tyrone Carter and LaTanya Garrett, they all supported us, 7 of our 10 state reps. And I am so proud that all 5 Detroit senators, Sylvia Santana, who's been at this for years, Adam Ollier and Marshall Bullock, who sponsored this, Stephanie Jang and Betty Jean Alexander. It was your Detroit legislators who came in there advocating for this every single day that turned the tide. And if you start getting checks back, and you're saving $500, $1,000, you see your rep and your senator, they took a lot of grief from the trial lawyers and the hospitals in this fight. They're still taking grief. Please be sure to let them know. So what can you do now? You need to shop around. You need to compare rates. If your agent gives you a hard time, call a different company. And when you find a good agent or a good company, share their contacts. And I'm going to tell you one last story that I heard today that actually really encouraged me. One of my staff in the Department of Neighborhoods, she called and said, she's got State Farm. She's got an agent named Alex. And she said, Alex called her and said, July 2nd's coming up, and you got a chance to have savings. Did a Zoom call, went through with her each member of her household. And she's got multiple cars. When Alex was done, she's saving $1,200 a car because her agent called up and did what he was supposed to do. Now, I don't know anything about Alex from State Farm. I thought they were all Jake. But Alex calls up, but here's one thing I know. When Alex made that phone call, he probably cost himself $300 in commissions. When he took her rates down, that was money out of his pocket. Think about the integrity of that individual to call, and he's calling all day to his customers saying, let me tell you your options on July 2nd. And so I would say to the people of this city, when you find somebody, when it's Alicia from Allstate or Joe from Farmers, when you find somebody who saves you a lot of money, tell your friends, put it on Nextdoor, put it on social media. Because we've got a lot of agents who either don't understand it or are trying not to. And we've got to get the best agents to our neighbors and our friends so people can get the choices they deserve. So today, we got 3 people who are experts in this. Mark Bernstein, as I mentioned before, was central in passing this bill. Shireen Silver from his law firm, and Leroy Maddock from AAA, and I want to give him a lot of credit because AAA knew I was a little angry at the insurance companies, and they allowed Leroy to come anyway because they wanted to make sure you had really accurate information. I think it's a really a great thing for AAA to have done today. So if you've got questions, you can send them by text or on the web. And with that, we'll turn it over to Malia, and we'll take the questions for another half hour or so.
Awesome. So, Mayor Duggan, our first question is from Ms. Terry, and it's actually a legal question, so I want to give that question to Mr. Bernstein. So, Mr. Bernstein, Ms. Terry states that my agent told me that if I buy limited PIP, that I could be sued by the other driver in an accident, and I could have to pay a lot of money in the lawsuit. Is that true?
No, not true. There's a lot of misinformation out there right now about this, as the mayor indicated. And so it's very important to get facts straight about this. But it's very important to understand that PIP is the medical insurance for your own health care. It has nothing to do with the other drivers. So your liability to other drivers doesn't change at all whether you have PIP or not. That's a short answer to that question.
Okay. Our second question is from Ms. Michelle, and she asks, what auto benefits are lost if you eliminate PIP? Who would like that question?
Go ahead, Leroy, you want to take that?
Yeah, sure, I can address that one. So when you eliminate the PIP benefits from your policy, what you're really eliminating are the medical portion of the PIP benefits. In the mayor's presentation, he showed that there were 3 coverages. There was medical, work loss, and survivor's loss. It's that medical portion, and that's the majority of the cost with PIP.
Thank you. Our third question is from Ms. Patricia. She states, how will the change lower premiums by zip code?
So the change will lower premiums by your choices. But what is going to happen overall, I'm quite confident, is Detroiters have the highest rates because we're getting the highest PIP charges. We're getting the highest PIP charges because there's so many lawsuits over the medical bills in Detroit. And so when we either cap the PIP benefits or as people opt out, nobody's suing to get the Medicare bills. They're suing to get the PIP bills. And so they can't use your credit score anymore, can't use your occupation anymore, and someday I'd like to get a bill passed that there's a single rate for the entire state. But we got about 2/3 of what we wanted this last time, and we're going to go back and try and get more.
Thank you. Our next question, what if you have not received your verification letter to submit to your insurance company? How do you obtain the verification letter?
So you call your employer. So call your HR department at your company, or if you're a small company, just go talk to your boss. And every company in this town, in the great majority of them, they'll give you the phone number at your HMO, and your HMO will send it to you. But talk to your employer, and your employer will get you your paperwork.
Our next question, you last said that Medicare would see a break in their insurance. What about Medicaid recipients? Will they see lower insurance rates?
Yeah, Medicaid recipients, I think one of the last things I pointed out is have a chance to buy a $50,000 option. And so I would say you need to quote, and I would say call 2 or 3 or 4 insurance companies. But I think Medicaid recipients on average probably see a $500 or $600 a reduction if they buy the $50,000 PIP.
Next question. Where may Detroit residents get written information regarding the auto insurance reform and premium reduction programs?
Yeah, so you got our website, detroitmi.gov, auto insurance questions. So the link you clicked on has got all of our information.
The next question. Many of us had our auto renewals and/or increases in June. What's the first thing we should do to lower our auto insurance rates on July 2nd?
Mark?
First thing you should do is tomorrow call your insurance agent. As the mayor said, there's not a huge incentive for insurance agents or brokers or companies in some instances to reach out proactively to their insureds because this new no-fault law is going to provide choices for consumers that will save them money and will potentially reduce and significantly, in some instances, reduce the commissions that agents and brokers make. So you have to be very, very proactive. And if you get information that is contrary to what the mayor said today or is contrary to the information that's out there about how this new law applies to your circumstance, shop around, talk to other agents, talk to other brokers, and get the information that you need. Be proactive about this and make the choices that are right for you and your family.
Thank you. Our next question is from Ms. Rosalind. She'd like to know, can the insurance increase other coverage to make up for opting out of PIP?
Randy, you want to take that? Or Leroy?
Right.
When you opt out of PIP, you are eliminating that cost from your bill, and no other costs go up when you make that transaction to opt out. So the short answer is when you go from unlimited to opting out, there's not an increase with that transaction.
And if you tried to, you need the insurance commissioner's approval. And so, and I think the governor is on top of this.
Okay.
So she's going to be watching for that.
Our next question. What happens if you have Medicare and Medicaid as your supplemental insurance?
Go ahead.
So I'll take a stab at that one. If you have Medicare, that's the dominant coverage that is needed for the opting out of your PIP medical coverage. And that will come first when you are choosing between the different options. So Medicare will allow you to opt out.
All right, so if you have Medicare and Medicaid, you can't opt out.
The next question is, hi, Mr. Mayor. 2 questions. Once opt out of medical coverage through no fault, will the insurance companies require re-verification of opt-out eligibility at every renewal period?
Yeah, so I'll take that one too. The answer is probably yes. Some of these things are going to evolve over time, but especially when you're opting out and choosing that opt-out level, there needs to be a revalidation of that while you go forward. And I think the reason for that in the law is just to make sure that the customer is aware of their choice with each renewal.
So you'll have to turn the paperwork again in 6 months.
Okay. The next question. Now that the new law excludes non-Michigan residents from driving my vehicle, how am I supposed to make sure my daughter, who lives in another state and doesn't need her own auto policy, is covered while driving my car when she is back home for a visit?
I hadn't heard that one. Mark, have you heard that?
I'm going to let Cherie, this is an out-of-state resident question that can get quite complicated. And
I don't think the statute prevents them from driving the vehicle. However, it does preclude them from getting PIP benefits under your policy or any other policy.
So what happens if my daughter from New York comes home for the weekend and drives my car?
Absolutely nothing. She drives your car with your consent.
Okay, but the car is,
She is covered in the event of an accident where she's at fault, but if she would turn to her own health insurance
okay.
for her own health or medical care.
Okay, so my coverage would cover the car, and her coverage, her health care
Her-
coverage would cover her.
Absolutely.
That's the answer to that. So she can drive it, and your insurance covers your car, her health insurance covers her.
And one of the significant issues, and we can get into this deeper, but it's getting to the weeds, the new law did put some walls around the state for non-residents and their ability to get PIP coverage in the event that they're in an accident here, which makes Michigan almost identical to every other state in the country that has no fault.
So Mark, it's interesting. So, we got $1,000 a car in Ohio. You practice law in Ohio. You practice law under the Ohio law for a long time. Why don't you talk about
Sure.
how that compares?
Yeah, we heard over the many years that we've been at this, basically the sky is going to fall if we tinker or change in any way with Michigan's no-fault law. And, we practice law in Ohio. We have, hundreds and hundreds of clients there. The sky has not fallen in Ohio. Ohio has exceptional medical care, has very robust medical provider community. In fact, I looked today at the Kaiser Foundation, which is an expert in the healthcare arena. There are the same exact number of healthcare jobs in Ohio as a percentage of their economy as there are in Michigan. It's 13%. What they don't have in Ohio are $4,000 or $5,000 or $6,000 no-fault insurance bills. They don't have MRI clinics on every corner or no-fault transportation vans clogging the streets because they don't have, as you talked about and we've talked about for years, this unlimited option and, more importantly, the fee schedules or the absence of fee schedules. And so one just has to look at what's happening in Ohio, the lower insurance rates there, the significantly higher percentage of people who are insured, to know that this is a system that it works there and is going to work here without any problems.
Okay. Our next question. I have 4 people in my home. 2 have employers with 2 are employed with qualified medical insurance. The other 2 are on Medicaid. All have individual auto insurance policies. Does that mean I cannot opt out of PIP? I have employer medical insurance. If I have to keep PIP, can I reduce the amount?
So the answer is you can opt out, okay? So 2 adults have their employer health care. 2 children have their own car insurance, their own PIP. Everybody's covered. So you can opt out. In that case, the fact they have their own car insurance, their own PIP, you've now counted all 4 people in the house, every one of them has health care, you can opt out.
Thank you.
All right, did I get that right, Leroy?
Yeah, that's
All
good. I
right.
mean, the simple premise here is just you just go down the relatives living in your home and just make sure they have health insurance from a source. That'll get you 95% of the way towards understanding whether or not you can opt out or not.
Next question. I have been told by my agent that I cannot opt out of the medical unless I have Medicare. I have reached out to my employer, who is a big 3 auto company, and they say they don't have to pay the premium. So can I opt out?
So you need to get a letter from your employer. If it's big 3, it's hard to imagine. It's not qualified health coverage. But you got to get a letter from your employer that you have qualified health coverage. And I'm hoping after today's briefing that a lot of the employers who didn't understand this will go get our forms and send them out. But if your employer has qualified health coverage, you just got to get that form from your employer and you'll be okay.
Next question. If you choose to opt out, can your medical insurance company deny your medical coverage due to an accident?
Oh, well, no.
In that instance, I think the typical protections that a person has under the law for health insurance applies. And some of the protections, by the way, that Obamacare put in place about pre-existing conditions and other things would make sure that you can't be denied health insurance. But I couldn't imagine a health insurer not paying a bill related to an auto accident for injuries related to that auto accident.
So let me see if I can do an illustration. I'm a City of Detroit employee. I have Blue Cross PPO. That's my coverage. If I opt out and I get a car accident, no, Blue Cross PPO at the city has to cover me, just as if I fell off a ladder. They can't deny that coverage. That's what you are demonstrating when you get the qualified health coverage letter. In the city of Detroit, if you opt out, the city of Detroit will cover you. That's going to be true, I believe, of the great majority of employers.
Will the Michigan Catastrophic Claims Association fee still apply? And that is from Ms. Stacy.
I can take that one. No. If you continue to elect unlimited coverage, your MCCA fee will drop to $100. If you opt out or take any other option, your MCCA assessment goes away completely. So you can take out your bill, as the mayor's been instructing people today or guiding people today, and just take a pen through the MCCA assessment if you choose anything below unlimited benefits, which is a significant amount of money.
Right, so if you're unlimited, you still have MCCA. If you're not unlimited, you don't have any MCCA.
Awesome. Next question. Can I be sued if a person riding in my car is injured?
Potentially. And so that gets into the bodily injury coverage, which is a different line. And this is one of the pieces we haven't talked too much about. But one of the things this bill did was increase the amount of coverage you have for bodily injury for your passengers. And Mark, why don't you talk about this? This actually protects you more.
Sure, it's a very important. So when the no-fault law was adopted in 1972, the minimum insurance that a driver has to have in Michigan was a $20,000 policy per person, $40,000 per accident.
For the passengers.
For any liability that you have for someone that you've injured. This increases that, and that never increased for almost half a century. It became one of the lowest minimum insurance rates in America. And so now that has we call that the RBI. The RBI has gone to $250. You can opt for a lower amount of $50, which is still over 100% higher than the 20 that's in place right now, which is a huge benefit for motorists.
So that may be a complicated way of saying that one of the things this law did was raise your insurance for a passenger who sues you. You actually have more coverage now for a passenger who sues you on the bodily injury line than you had before.
Okay. Next question is, will the health insurance rates increase through my job?
For your job.
I think the question is an argument that was made during the fight over this was that this would cause health insurance rates to go up as health insurers seek other ways to recoup the expenses that people predict they're going to have or argue that they'd have through their exposure in this new law. I don't think there's evidence of that. That's not what happened in other states. In Ohio, for example, that we referenced, in Illinois, in New York, in Florida, where we also practice. That hasn't been our experience anywhere.
So think about this. So the city of Detroit has 8,000 employees. We cover you whether you have a heart attack, a stroke, you have a baby, you get COVID, whatever it is, we cover everything. Car accidents are actually a very small percentage of incidents in your overall health care. You think about diabetes and chronic heart disease and everything else. And so I don't believe companies will see a significant increase. It may be a small increase, but it won't be anything like the $1,000 or $2,000 that you would save by opting out.
The next question is, are insurance rates for teen drivers going to go down?
Right?
Yeah. So there's nothing in the law that changes the rates for teen drivers, but the law does give you choice. So if you want to choose $250,000, $500,000, or if you can opt out for your policy, you'll be able to save in that way.
I'm looking at my teen driver son, and I can appreciate why those rates go up, though. Sorry.
The next question is, what are the changes for bodily injury? My agent asked me if I wanted to increase my amounts to up to $250,000. So if someone sued me, they would pay up to $250,000.
So let me do this as simple as I can. And I had a bodily injury section in here. It had been another 10 minutes, and I thought the presentation was long enough. But bodily injury, passenger, pedestrians, but let's just make it easy, passenger gets hurt. The old law, you had to buy 20,000. The new law says you have to buy 50,000, and it goes to 250 automatically unless you ask for 50. And so you got to think about your own assets. They can't take your house, but they can pretty much take everything else. So do you need $50,000 or $250,000 of coverage? You need to think of how much of your own assets are at stake. I would say the difference between $50,000 and $250,000 of coverage is about $40. And so Leroy will probably give you a precise amount, but it'll be in that range. And so I think my judgment, I don't want to talk too much about choices, but bodily injury, which protects you from lawsuits, is something I think is important. I guess I'll let my actuary friend here talk about, what do you think about this?
Absolutely. When you're choosing your BI limits, that's really, it varies for each individual person and their insurance policy and their circumstances. I think that's really the best conversation that you can have with your actual agent to figure out exactly what that right level of coverage is that you should pick.
This is an interesting question. I bundle my house and car. Will it increase the house portion? So will the insurance rates increase for the house portion?
So if I understand the question right, the question is if you have both an auto and a home insurance with the same company, most companies offer a multi-product discount where if you insure both policies at the same place, you get a discount. There's nothing in the law that would change that. So I would expect that most companies will continue to have that discount available.
Okay. Next question is, if you lose your health coverage at any time, can you opt into PIP at any time?
Yeah, so this is a really good question. If you have opted out of PIP Medical and you lose your insurance, you have 30 days in the law to actually go and opt back into medical with your auto insurance. Within that 30 days, if you haven't gotten that PIP Medical yet, the ACP will actually cover your claim for $2 million worth of medical coverage. So you have that 30 days to opt in, and companies cannot prohibit you from opting in at any time.
And one other point to make, though, that don't think you are obligated to wait until a renewal point if you become eligible for an opt-out. So you can immediately get savings if you get employer-provided medical coverage or Medicaid or Medicare.
So if you lose your job, you can go get PIP right away because you lost your health care. If you get a new job and you got health care, you can call your car insurance company and you can drop PIP. So the point they're making is whatever day your life changes, you can choose the right car insurance option for you.
But make a choice, because if you don't make a choice and something happens beyond that 30 days, you have no health coverage, you have no PIP coverage.
Next question. Are my minor grandchildren who do not live with me covered while riding with me?
No. No, they're not. It's only you're the named insured, a spouse, or a resident relative, and by that question, the fact scenario, they don't live with her, so they're not covered under her policy for PIP.
Right, so they'd be covered under whoever they live with, whatever health care they have. And this is going to be true of anybody. Anybody who's riding with you that's not in your household will be covered by whatever health care they have. They're not covered by you.
Okay. This next question is from Miss Zoe. My boyfriend lives with me, but we are not married. Do I need to provide his health coverage letter to my auto insurance company to opt out of PIP?
He's a non-relative in the household.
Ms. Zoe should get married to her boyfriend.
Well, no, he's a non-relative in the household. It doesn't count, right?
Right, if she
She's not covered under
became
her.
a relative.
Right, but if she
but
wanted,
right now, no.
But if she wanted, we'll start with this. If she wanted to opt out, she could.
Correct.
If she wanted him on her health insurance, depending on your company,
Yes, I think is that correct? I think that is correct.
Yeah, when you're opting out, the only thing that matters is you, your spouse, and your resident relatives. So
Right.
everybody in your family that lives with you, And since the boyfriend is not really related to you, the boyfriend doesn't factor into that scenario and she can opt out.
Unless she names him as an additional insured.
Right.
Right, so you can put your boyfriend on as an additional insured?
Additional insured, but
All
if
right.
you wanted to opt out, he would have to have insurance.
Okay,
Expensive boyfriend.
all right.
Okay. If I haven't had a car in Detroit for the past 2 years because of the high rates, will I be penalized if I go out and purchase a car now to start my insurance in Detroit?
Yeah, so that's an easy question. If you were not required to maintain coverage before and you go to seek coverage, there's no penalty. You get the same rate as anybody else. And in addition to that, the law gives a grace period for those people who were driving without insurance to be able to purchase insurance where companies can't charge them a higher rate or reduce their coverage because they didn't have it. So on both of those accounts, there's no penalty.
Right, so this is actually one of the really good provisions of the bill that hasn't been talked about a lot. If you don't have insurance and now it's affordable, they can't charge you a premium because you were uninsured before. There's a window period, is it 6 months? What?
18 months.
18 months. So for 18 months, they can't charge you a premium. So if you've been driving around without insurance and now it's affordable, you don't get charged a higher amount because you're uninsured. So you got an 18-month period that you can switch over without getting a higher charge.
The next question, is there a possibility that our health care insurance, specifically Medicare, payments will increase if we opt out of PIP?
I don't know why they would.
I couldn't imagine that. I mean, Medicare is a federal program that's spread across the whole country.
And in the other 49 states, they're not
Right.
paying car insurance for their health care. So I can't imagine how it would affect your Medicare rates. We got time for one or two more?
Yeah, we sure do.
Or do we, go ahead, John's standing up like we've taken too long. Okay, go ahead.
So if my son lives out of state, drives my car, has an accident, he isn't covered under my coverage because he is not a resident of the household, only a visitor. Miss Andrea.
Right, he would be covered for his health care under his own health care. He's not covered under your health care, that's right.
Okay. And then the last question. My son doesn't live in my household and has unlimited insurance on his own car. He's a student. I have Medicare and Blue Cross Blue Shield and plan to opt out of PIP. What happens if he drives my car and is injured in an accident? Is he covered by his medical insurance?
Yeah, so you will
Yeah.
always go to your own policy when you have an accident. So he would have unlimited coverage with the policy that he purchased.
Yeah? I'm learning a lot here.
Like
Go
what?
ahead.
That's it, sir.
Is that all of them?
Yes, sir.
All right, well, the three of you, thank you very much. I think these are questions that people have been asking. I can't believe all the really good questions we got. And I hope everybody calls your company tomorrow, get your paperwork, calls your agents, shop around, and make the right decision. Thank you.